and welcome to this edition of Business Daily. I'm Lee Ji-yoon in Seoul. We have a lot of stories lined up for you today, so let's get started with a look at the day's highlights. The Ministry of Science, ICT, and Future Planning lays out 9 key projects in information and communications technology to help Korea spearhead the 4th Industrial Revolution. Olympic sponsors are eyeing the 2016 Rio Olympics as a way to not only boost their sales, but as the best chance to advertise and enhance their brand image. These stories and more coming right up. The Korean government has laid out a 9-point plan to make sure that Korea stays ahead of the curve in our rapidly changing world. And the project gives us a sneak peek into what Korea could look like in the next 10 to 15 years. Our Kim Ji-yeon has this report.
The Ministry of Science, ICT, and Future Planning has unveiled 9 strategically important projects to raise Korea's competitiveness in the so-called 4th Industrial Revolution. In the artificial intelligence sector, the ministry plans to support the collaboration of state and private entities for the creation of an AI product and services platform. In the process, it plans to increase the number of software engineers to more than 6,700 by 2019. In the virtual or augmented reality sector, the ministry has unveiled a flagship or 3D platform and content project for the development of higher resolution VR device screens, as well as face and gesture recognition programs for interactive devices. It hopes to reduce Korea's technological gap with the U.S. in the sector from 1.8 years to less than 6 months by 2020. The ministry will carry out policies for the commercialization of autonomous cars by creating a regulation-free zone by 2020 for on-road testing in the southeastern city of Daegu. The ministry also plans to knock up to 40% off manufacturing costs by supporting the production of lighter metal-based materials. It will converge state infrastructure projects in the water, energy, and transportation sectors for the advancement of smart cities and microgrid management run on big data technology. The ministry also plans to make it possible to utilize big data to promote medical services to prevent chronic diseases and increase the chance of survival among cancer patients. The ministry says it will increase its financial support on a case-by-case basis for the development of new biomedicines and increase competitiveness in the biosector. In order to carry out Korea's goal to reduce carbon emissions by 37% by 2030, the ministry plans to aid tech development in the production of methanol, which results from the separation of carbon monoxide from CO2. Last but not least, the ministry is to aid tech development that will help alleviate the chronic issue of ultra-fine dust and create a database to improve air quality forecasts. Kim Ji-yeon, Business Daily.
Despite a slight improvement in the jobs market in June, growth slowed again last month. This as the impact of Korea's corporate restructuring begins to take form, especially in regions where the country's major shipyards are located. And for a breakdown of the numbers, here's our Kim Min-ji.
Korea's job market showed weak growth in July. Statistics Korea says the country added 298,000 jobs last month from a year ago, bringing the total number of employed to over 26.6 million. July's figure marks a slowdown from June when job growth rose above the 300,000 level for the first time in 3 months.
The slowdown comes on the back of a decline in the manufacturing sector. It saw a dip of 65,000 workers, falling for the first time in 4 years. This is due to slowing exports as well as a slump in the shipbuilding and automobile industries.
The government's ongoing corporate restructuring drive is also taking a toll on specific industries and regions, with the country's shipbuilding hubs bearing the brunt and seeing their jobless rates climb. But this is not all without hope. The youth employment rate edged up to 43.6%, while the youth jobless rate fell to 9.2% from 10.3% in June. While the government has vowed to boost job creation and dull the impact from restructuring through a budget supplement worth roughly $10 billion, experts question the viability of these claims.
Of the supplementary budget, only about $2 billion will be set aside for job creation and another $2 billion for corporate restructuring, so the impact will be limited. It may have a positive effect on related industries in the short run.
Although reshaping faltering industries remains the biggest downside risk for the job market in the latter half of the year, the consensus is that the country needs more policies to support youth employment. Experts say in the long run, the government needs to draw up more substantial measures to create better quality jobs, and only then can it be considered tangible progress in the job market. Kim Min-ji, Business Daily.
The Korean won has strengthened to a near 14-month high, trading below the 1,100 won level against the greenback on Wednesday. Extending gains after Standard & Poor's upgraded Korea's sovereign credit rating to a record high of AA on Monday. The local currency closed at 1,095.41 against the U.S. dollar. Now, this comes as demand for the dollar weakened on worse-than-expected U.S. non-farm productivity overnight, and a growing appetite for Korean shares led to an inflow of foreign capital. The won has become the second best performing Asian currency in emerging markets so far this year after Malaysia's ringgit. The 1,100 level is widely considered a psychologically important barrier that analysts expect could trigger intervention from foreign exchange authorities. Meanwhile, Seoul shares ended higher today amid lowered market expectations for a U.S. interest rate hike following softer U.S. productivity data. At the closing bell, the benchmark Kospi was up 0.04%, finishing the day at 2044.64, while the tech-heavy Kosdaq also went up by 0.96% to end at 707.46. And athletes aren't the only ones chasing gold at the Rio Olympics. The global sponsors pump billions of dollars into the games. It's an expensive business, but in return, they get the ultimate platform and potential to reach hundreds of millions, if not billions, of people. Our Shin Se-min reports from Rio.
The 2016 Olympics in Rio are the biggest money-spinning Olympics in the 120 years of the modern games. TV companies from around the globe have shelled out billions of dollars to screen the festival of sport, while the 11 global sponsors have a combined market capitalization of more than $1.5 trillion. Japanese automaker Nissan, Brazil's leading beer Skol, and the world's largest beverage manufacturer Coca-Cola all seek to enhance their brand image by sponsoring the Olympics.
And we did sponsoring the Olympics for 88 years. So that's the longest sponsorship on earth in terms of sport. So, well, even if you're well known, you still need to work on what we call the brand love. You know, people liking your brand and want to consume your brand and want to interact. So what we are doing here is really about interacting, engaging with our core target.
In other words, Olympic branding is a powerful and effective marketing tool.
Samsung Electronics is one of official 11 brand partners of the Rio Olympics. Korea's tech giant sees it as a great way to win sales and brand preference around the world.
The Rio Olympics marks the 10th time that Samsung Electronics has been involved in sponsoring the Games, including the Winter Olympics. Samsung has even introduced Rio to its Galaxy S7 Edge Olympic Games limited edition smartphone, a new line of wireless headphones, and a fitness gizmo. At its Galaxy Studios in the host city, fans and athletes alike can try their hand at various sports and activities through a range of virtual reality experiences. So far, the feedback has been positive.
After seeing all these new features, it makes me want to upgrade my phone to the newer version.
Well, seeing the phone today and seeing what it could do changes my image of what I thought the brand was before. And when I've seen it before, I haven't been able to see all these features, and today I was able to see all the features at the store.
The official sponsors are already eyeing the next big sporting event, the 2018 Winter Olympics in Pyeongchang, to further boost their sales and brand recognition. Shin Se-min, Business Daily, Rio de Janeiro.
Ahead of the Bank of Korea's monetary policy meeting scheduled for tomorrow, all eyes are on whether the BOK will further cut its already record low interest rate at 1.25%. Now, this comes as market watchers debate whether the U.S. Federal Reserve will raise rates sooner than later on the heels of mixed economic data. And to tell us more about this, Professor Shin Se-dong of Sukmyung Women's University joins us in the studio today. Hello, Professor.
Pleasure.
All right, so Korea's central bank left rates unchanged last month, followed by a surprise rate cut back in June ahead of the Brexit referendum. And eyes are now on whether the U.S. Federal Reserve is going to pull the trigger in September. So what kind of improvements or unexpected drops have we seen in terms of U.S. economic indicators?
Well, U.S. economic indicators are kind of a little bit, mixed in the sense that U.S. growth for the second quarter was 1.2%, which is pretty disappointing when you think about the market expectation of 2% growth. But on the other hand, the employment and the new job statistics are very surprising in the sense that unemployment rate recorded 4.9%, which is almost the full employment level. And new job created for the last month is 255,000, or as opposed to the market expectation of 180. So it's about 60%, bigger than market expectation. So although economic growth seems to be a little disappointing, the employment figures and new job statistics are very surprising. So I think the probability of U.S. rate hike in September is getting bigger than expected last month. So personally, I think there's a strong chance the U.S. will raise the rate in the month of September, as opposed to the market expectation, about 20%, possibility of rate hike in September. But definitely, I think in December, I think U.S. will decide to raise the rate in the month of December.
Now, if the U.S. raises rates next month, then what kind of pressure would that put on the BOK when determining its monetary policy?
Well, if the U.S. decide to raise the rate either in September or December, I think the Bank of Korea has to raise it, because otherwise, the interest gap between United States and Korea has been almost, 0.4% now. And in the sense that if the U.S. raise it, I think the gap will be almost non-existent. So I think the Bank of Korea should follow by raising it rather than lowering that. So I think definitely the Korean market rate will also rise after U.S. rate hike.
Now, it's been 2 months since the Bank of Korea cut interest rates to a record low of 1.25%. But have we seen any signs of it yet helping the economy?
Well, it's too early to talk about economic effects of the June rate, decision lowering 1.5%, 1.25. But if you look at the 5-time rate decline for the last 3 years, I think the economic statistics are pretty much disappointing in the sense that economic growth rate almost no change, and especially the investment number was about 6.7% last year, third quarter, but now it dropped to negative 2.6%. So no increase in investment and no substantial increase in consumption, and only the driving force for Korean current economic growth is construction. So otherwise, economy isn't pretty much responding to rate change for the last 3 years.
But that's not only the case for Korea, because other countries around the world are definitely feeling the limitations of rate cuts actually helping to boost their economies.
Right. The answer, I think, to that question is uncertainty. In the case of Korea, we had the uncertainty of slowing Chinese economy, and also the expanding burgeoning of household debts, and very, poor performance in export. So that is the uncertainty in Korea. And if you look at the uncertainty in the global context, still, China plays a substantial part of the economy, and the China economy is very slowing. And also the oil prices, and commodity prices are performing very poor. And also there's a lingering of a Brexit effect. So in the globally, not just in the domestic area, but in the global arena, I think the uncertainty of real economy is still, lingering around.
And of course, like you mentioned, there are still worries about Korea's massive household debt because there seems to be no signs of stabilizing yet, despite government measures to, I guess, control those debt levels.
Right. I think the expanding household debt is has been the trouble for the Korean economy for more than 2 years. So still, in the month of July, it increased another 7 trillion. So I think in expanding in the household debt is also significant side effect of low interest rate. But you have to look at very important side effects in other area. In other words, very low interest makes pension funds and insurance corporations and the banking industry the profitability has been shrinking at a very fast pace. So I think the entire finance industry is suffering from very long period of low interest rate.
Now, the Bank of Korea did emphasize the need for the quick implementation of the government supplementary budget, which still waits parliamentary approval. So with all this under our belt, what's your outlook on the Bank of Korea's future monetary policies?
Well, Bank of Korea has little room and little, the tools to maneuver because interest rate has been down to the lowest level, 1.25%, record level low. And also the Bank of Korea has been expanding money supply very much for the last 3 years. So we have been supplying a lot of money, we have lowered the interest rate, and economy isn't quite responding to that. That's why Bank of Korea is emphasizing, economy is the role of the government. You have to, adopt a lot of expensive, fiscal policy, and supplementary budget is one of the tools the government can, implement in boosting Korean economy.
All right. Thank you so much for your insight today, Professor.
You're welcome.
And that brings us to the end, but we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and goodbye.